Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny, and today we're going to talk about how the stock market is addicted to quantitative easing, which is like jonesing for the next hit, and why the market reacted so negatively when the jobs report came out, actually high and good for the American economy. What the hell?
And Vinny is stoked. If you like this kind of entertaining stock market content, completely unedited, just go ahead and give us a like and subscribe, and we'll get started.
Two Stupid Guys Trade Stocks.
This is my favorite thumbnail of all time.
I agree. You know, we're probably the only YouTubers that put Dave Chappelle and Jerome Powell on the same thumbnail. Okay, you have to give us credit for that. Smash the like button to say thank you. But that's what this market reacts like to me. It's like they're just like jonesing for the next hit of quantitative easing. So
Wait,
if
before you
you're
go further,
unaware, the
what
Fed
is
funds rate
quantitative easing?
So quantitative easing is just a accommodative financial policy, meaning stimulus. More money going out there. The federal government is buying assets, lowering interest rates. They're trying to exactly. This is Jerome Powell with the money printer meme. That is quantitative easing, and the market is going damn, can I get some more of that stuff? Yeah, just printing that money. So if those of you who live under a rock somewhere, right, interest rates have been going up because they've been trying to cut back on inflation. But the hope was that we would be teetering towards recession, which, there's certainly plenty of indicators that exist out there, and that the Fed would now have cover to slow their pace of this interest rate increases. And that's what the market was kind of banking on, and why we've had this rally despite the fact that there's been negative news stories out there regarding the stock market, at least my stupid guy opinion. But when we saw the jobs number come out, and it came in like hot, you're talking 528K jobs as opposed to the 258, which is what they were expecting, and you have unemployment rate going down to 3.5%. It really kind of gave the market a little bit of pause in that the economy may actually still be doing okay enough that the Federal Reserve is going to keep ratcheting up the rates. We got a meeting coming up in September, a little bit over a month from now. We might be looking at another 0.75% now, is what the market's saying after this whole thing.
I don't understand the logic of anyone saying that they're not going to increase the rates, because then inflation will just continue to be a problem.
But is inflation a problem for the asset owners?
Is inflation a problem for the asset owners?
Yeah, if you own a whole crap ton of stocks that are just getting inflated with easy money and the number of values is going
that's not sustainable, because eventually you're going to fall off a cliff. So is it good in the long term? Yes. Will it have a horrible, bloody, horrific ending? Yes.
Yeah. I mean, it's like any drug addiction, right? Like it doesn't end very well. I'm just going to leave that right there.
Fair.
But that's exactly what's going on here. The market is addicted to stimulus, and that's what they're hoping for. They're jonesing for another hit of this whole thing. And, that's what they're trying to say, basically, is that the Fed is not going to be able to pivot if the jobs market is continuing to do well, and that there's other signs that the American economy is continuing to do well. This is an interesting chart to me, which is funny because, you're talking about unemployment being 3.5%. This is actually looking at how many people are participating in the labor market, and we still haven't recovered to pre-COVID levels in terms of actual participation rate. Some people left the workforce and are just never coming back.
Okay, so and Burry did a tweet earlier that echoes this number. He said something about jobs going up, but it's a shrinking labor force in general.
Exactly. That's what the point is here.
So I wonder where those 2% of Americans are, that gap from 64 to 62.
I mean, you and I both work in medicine, healthcare, right? Like how many nurses over age 50 do you know that retired during COVID and never came back?
All of them, yeah.
Yeah,
dipped.
Yeah, exactly. There was an
Rightfully
exodus of people going nope, I'm not doing this.
Yeah, I will stress, rightfully so. I would also have done that if I was in their position.
Well, that's why you're seeing these $20,000-$25,000 sign-on bonuses for nursing staff right now. That's where the shortage, in part came from.
How long until logic catches up to this? So, for instance, you see these numbers, right? And for instance, we did a video on oil showing, which is probably one of my favorite graphs of all time, it was saying that oil rigs are increasing 70%, and it's wild. But then you zoom back a month, and they were down over 50% from where they were still, even with the increase, right? If you have $100 a share, you lose half, 50. You have to have 100% to get back. It's not the same. It's a little bit of a stat problem. So how long until this becomes mainstream and people realize that graph is rough?
Yeah, there's still not as many people in the workforce as there was before COVID.
Yeah, and we're
That
hitting
what you're trying to
3.5. Yeah, that's a problem.
Yeah. Yeah, no, I agree. I mean, you certainly have some contributions probably of improved worker efficiency and that sort of stuff, but you're still not going to be able to, have a lot of jobs that are going to be staffed to the same level. I mean, hell, like every restaurant I've been into in the last month, I don't think I've been offered a drink or refill once.
Yeah, every
just how
single
it
one of them
goes.
have a hiring sign too. All of them, literally every single one.
Yeah,
Choir.
exactly.
Oh, all
Yeah,
right.
there's still, I think, as of this jobs number report number, 1.8 jobs for every available person on the market, something like that.
Wow. Okay.
Yeah.
All right.
All right.
All
Yeah.
right.
Let us know what you think.
Thanks, dudes.